Alrighty, what is up everybody? Today we are going to look at MATIC as requested on a couple of comments. Now you see we haven't looked at MATIC in quite some time. The last time we looked at it was during a live show where we played it from 10 cents to 17 cents. Got a nice 70% profit, locked it in, said thank you, and walked away. So now we're going to come back to it, and let me go ahead and remove all the drawings here. Now if you're new to trading, charting, and technical analysis, the link down below for TradingView, and I'm not an affiliate, I don't get anything, but if you want to practice charting and technical analysis for yourself on a live market for free, there's a setup tutorial in a link below. So let's jump into it real quick. Let me draw a couple of different trend lines for this channel here. Yeah, it's gonna look kind of wonky at first. Alrighty, and you know what? I'm just gonna draw that guy right now because I don't think we've made any definitive drops here. So let's go ahead and throw the Fib retracement on there. Now Fibonacci retracement, we are on the 1 day time frame, which means 1 day is one candlestick, bulls pushing up, bears dragging down. Fibonacci retracement is going to show us possible points of retracement. So I'm going to take it to this first one. We can see we retraced to 50%. Take it to the second one. We also hit the 50% retracement and bounced, and let's take it up to where we are now. So let's see here. Now right off the bat, the last two times we have hit a peak, got rejected off the top of this channel line, and came back down. We came back down 50%. So right off the bat, I would be looking for a fall all the way down to 13 cents, which is something really to look out for if you bought at the top. Okay, potentially right off the bat, it kind of looks like we're going to be heading down to either the 13 or the 16 cent mark. I would not be interested at all until I look at the market when it is at this right here, 176. Do I think we're going to go back up before 176? No, I do not. But let's take an even bigger look at things, right? So let's take a look down here at our indicators. We can see from the beginning of this movement to where we are right now up here on the RSI, we have big bearish momentum. Now if we look at the price action, we see the inverse. We see a very bullish price action, and you know what that means. Bullish price action, bearish Wilder's index. That means we have a bearish divergence, and look out below, right? That is another bearish indicator. Okay, let's take a look at the MACD. Now the MACD are our MACD, moving average convergence divergence. The blue line is representing the 12 EMA, where the gold line is representing the 26 EMA, or moving average, essentially. The 12 looks like it is about to cross back under the 26, which would be a short sell signal, or a GTFO, the market right now signal, right? Now if we have a confluence of multiple indicators and a recognizable and repeatable established pattern that says we're going to be going down from here, that is something that I definitely take into account. So right off the bat, nope, I have no interest buying anywhere in here until we see at least 176, or I see some serious correction right here. Now the only way I would want to buy before we see the 176 is if we have the RSI, or our Wilder's index, make a higher high. We see our MACD bounce, possibly we'll look at the 4-hour time frame in a second, and the stochastic really can do whatever it wants, right? That's only accounting for 5 to 10% of my decision making. I just like to see what the momentum is doing, represented in the stochastic. So let's actually do that. Let's look down in the 4-hour time frame. Alrighty, so you can see the MACD here has already had quite the spell, the 12 under the 26. Let's look here at the RSI. Our Wilder's index still in a downtrend, and our stochastic is sitting on the floor right now. So I would stick by that again, 176, and then if not 176, 163, and then 137. I believe 137 would be a very, very safe place to buy. So if we do reach down to the 137, and remember, I'm not a financial advisor, this is not financial advice, I'm not a professional trader, this is not enter or exit any position advice, this is just what I'm looking at and what years of technical analysis have taught me, right? So the 137 would be extremely safe place to buy. The 163 to the 176 is you have a good probability that if we reach this range, this is where we will bounce, right? That's where we'll go up. If not, then we'll go up there. Now, say we do bounce off of the, middle line here, the 162. All right. Now, if we do bounce off that, and I decide to buy back into MATIC, where exactly would I want to sell? So remember the last time we played it from 10 cents to 17 cents, locking in that 70% profit. Well, and this is very speculative at this point. If we do bounce off the 1.6, 164, 163 area, I would then be looking for a run up to 3.0. So I'd be looking for a run. My first target would be 28 cents. My second target would be 30 cents. So again, that would be a very nice move. That would be about another 75 to 85% move up to 28 and 30 from the 16. Now, if we were to go all the way down to the 13.7 before we bounced, let me actually take these lines away. If we went all the way down to the 13.7 before we bounced, I will then be looking for a target anywhere between 25 cents to 28 cents. So anywhere between this 50% and 61.8% retracement that MATIC seems to really like. So whenever this does bounce, wherever that may be, we will be doing an update video as I try and put out multiple videos every single day. If you guys want a chart analyzed, leave it down in the comments below. Don't forget to hit that subscribe button and give this video a thumbs up. And also, links down below, we will have links to the Discord community where you can socialize and ask questions with all the community members that we have in there. And we also have the TradingView charting setup and tutorial in the description as well. So I will catch you guys on the next video.